Let's talk about your market outlook also. So what are the triggers that you're working with, and what is your outlook for the Indian markets if you talk about short-term trend or maybe medium-term trend?
So I'll tell you two objectives of this particular question is what we look at. First one is India as a stock. India as a country is the most preferred stock at this point of time because of the inherent strength of the country and the numbers that we are seeing domestically. This is point number one. Point number two, because of this thing, India was comparatively expensive in the previous 18 to 24 months. And that's why we saw that kind of a time correction or what we call as a period of consolidation in the Indian capital market space for the past 15 to 18 months. We, whenever we saw an 18 to 24 months of consolidation in the broader indices, the next 24 months are always very, very good for the broader index. And that is what we are seeing for the past 2 months also. The differentiation of the interest rate between India and US is now again broadening up. And that is what is leading to a lot of money flow coming back to the Indian capital market. So our outlook for medium term to long term is positive for the Indian capital market. But yes, in the near term, we are overheated at this point of time. Some bit of cooling off and some bit of coming down from the from the levels that we are today is always going to be healthy for the market, and it is going to create a lot of opportunities for investors to pick up the right stock.
Okay, absolutely. And what about the sectors that you're bullish on, especially at this point in time?
So rather than naming any particular sector, I will tell you what we are looking at. We are looking at fundamentally good companies and sectors where we have seen time correction, price correction, but with an earnings upgrade. So wherever we have seen a 25-30% kind of an earnings momentum in the past 18 to 20 months, but at the same time frame, that sectors and that stock have taken a beating by let's say 25-30%. So there is a 50% kind of a correction that has happened into that companies and sectors. That is where the risk reward is favorable, and we particularly like that kind of sectors from the current levels.
Okay, and any space that you're avoiding at this point in time?
There is a lot of overheating in most of the names which are hitting to new 52-week highs on the private sector banks, and we typically want to avoid stocks which are very, very expensive at this point of time. So few pockets of the market are showing that kind of exhaustion in valuation, but a lot of pockets in the market are showing good value opportunity along with growth prospects, and that is where the next level of wealth creation can happen in the next 3 to 5 years.
Okay, and also what about broader markets? I mean, they also have been doing phenomenally well. So, your thoughts on broader markets?
So broader markets are very good. So that's what we said, that there is a need of an active fund manager because the broader markets give you a bigger opportunity to create that kind of a wealth for the clients. So broader markets are doing fine. What we have to look is a bottom up approach at this point of time because the broader indices are nearly at all time highs. So we need to do a lot of stocks picking, and the bottom up approach is what we will be looking at from the current level.
If you like the video, do like, comment, share and subscribe.